Hello and welcome to an FXTimes daily market recap. I'm your fundamental market analyst, Nick Nassad. Today is Friday, March 19, 2010. We start with the euro-dollar pair, which in the beginning of the week, after some guarded optimism in regards to possibility of a EU bailout for Greece and a rather soft FOMC statement, we hit the 1.38 level, but that was rejected, and the last two sessions have seen the euro slide rather sharply as there's conflicting signals coming out of the eurozone in regards to if there will be a bailout package for Greece. Greece has about 20 billion euros worth of debt to roll over in the coming 2 months, and it is seeking help in order to finance that debt. If no aid is forthcoming from the eurozone, then it may have to look for some kind of IMF bailout. While German officials have said that they haven't ruled out IMF aid for Greece, we had coming over the wires today that France is opposed to Greece seeking aid first from the IMF. So there's still uncertainty, and that has been pushing the euro down. We have next week on the 25th a European Union summit, and it is there that the Prime Minister from Greece has urged some kind of concrete details in terms of some kind of financial aid package. So this news regarding the going to the IMF for a loan pressured the euro down from the above the 137 level to start yesterday's trading, and we settled around 1.36. However, overnight we plunged even further, and we now find support at 1.35. We had an increase in overall risk aversion in today's trading, which also helped the greenback to strengthen. Taking a look at the pound dollar, for instance, we see a very sharp slide in today's trading, which amounted from high to low to about 260 pips. That moved us back below the 1.52 level, which had acted as resistance throughout most of March, but we did break it in the middle of the week, as we did have risk appetite in the first half of the week, but we were unable to move further than the 1.5375 level. And here we had overnight news that one of the Bank of England policymakers said that there is still a chance that the UK could see a double dip recession, and that pressured the pound, and it was sold off against the dollar, and we retraced all our steps all the way to the 1.50 level. So that was our low earlier in the week. So as we can see, we had a sharp turn from the first half of the week to the second half of the week in terms of both the euro and pound, with the greenback being the main benefactor. Turning to one of our commodity currencies and growth-linked currencies, the Australian dollar versus the US dollar, here too we saw a move in favor of the greenback, especially in New York morning trading. This coincided with a fall in US stocks, but also with the announcement that the India Reserve Bank was moving to increase its interest rates. So it was an unscheduled move, and that news pressured commodity currencies such as gold, oil, and silver. And we know that the Australian dollar, amongst some other currencies, are very closely correlated to commodity prices. And when those sank, the Australian dollar fell below this important level we had moved above in the middle of the week at the 0.9190 level. The New Zealand dollar US dollar also saw a sharp decrease in today's trading as we moved from the 0.7150 level down around 100 pips to 0.7060. So that corrected this rally that we had seen throughout the first half of the week, and if we plot a Fibonacci retracement level, we could see that we moved just below the 50% retracement of this rally. So we did find some support, and we'll see what traders' moods are when they come back from the weekend. Now, a third main commodity currency, the Canadian dollar, had an interesting price action today as it had some very positive fundamental data come out. So it had been declining, or this pair had been rising in favor of the greenback, and we tested the 1.0190 level just before the open of New York trading. And at 7 a.m. we had the consumer price index from Canada come out, and it showed rather high inflation, and that was followed very closely at 8:30 by a retail sales report that showed better than expected retail sales from Canada. So as you can see, that garnered a very strong response in the markets as we pushed to the 1.0060 level in a very quick drop. But with the risk aversion and commodity currency sliding and the rest of New York trading, we did pair that initial slide, and we moved back to our levels that we had seen in overnight trading above 1.0150. So while we have seen a bit of a setback for some of our commodity currencies, we'll see if this is a more temporary response to end the week and if we have a reversal of these investor sentiments in next week's trading. Taking a look at those two Canadian reports, consumer prices for February rose 0.4% on the month, which matched forecasts, while the annual rate was at 1.6%, which was higher than forecast, though lower than we had seen in January. However, the key here is that the core CPI jumped 0.7% on the month, a very sharp increase, and annual core prices were moved above the 2.1% level, which is the main measure that the Bank of Canada uses to determine if prices are increasing. So the fact that it moved above the 2% target could influence the Bank of Canada into increasing interest rates, maybe perhaps sooner than expected. The retail sales report, meanwhile, showed sales up 0.7%, which was slightly higher than expected, while the figures for December were revised higher, but if we take out auto sales from the equation, we see that sales were up a very sharp 1.8%. So again, these two readings, as well as some of the other positive data we've seen out of Canada, including stronger than expected GDP growth and pretty strong housing sector readings, makes it more likely that the Bank of Canada will begin to tighten rates sooner. So that will do it for our market highlights for this week. And let's take a look on next week's key releases. From the US, we get data on home sales, including existing and then new home sales, coming out on Tuesday and Wednesday. Also on Wednesday, we get a measure of durable goods orders. And Friday, we get the final version of fourth quarter GDP, as well as the final version of UMich consumer confidence for the month of March. From around the world, the main releases will come from the UK. First, we will see its consumer prices on Tuesday. That'll be followed by the CBI realized sales index, which is an indicator for retail sales. That will be followed by the official retail sales figure on Thursday, and then also on Wednesday, the UK releases its annual budget. We will also next week get the Germany IFO Business Climate Index, which is an influential reading for activity. And the last fundamental release to look out for is New Zealand's fourth quarter GDP. That will conclude our coverage of the Forex market for this week. For more news, videos, and analysis, please visit our site FXTimes.com. I want to thank you for watching and wish you a great weekend.